Hello everyone, and welcome to another weekly video wrap-up. Today we're going to start by talking about the Bank of England, which surprised investors by raising rates by 0.5%, reaching a fresh 15-year high of 5%. Okay, now this has been done to combat what they're calling stubbornly high inflation. Now, it is true that the UK is suffering from significantly more inflation than other countries in Europe. Now, does this mean that there's anything different going on? Well, it is true that the UK seems to be behind in terms of the inflation story. However, if we look at this chart, we can see that it's not a matter of inflation being on a different path, rather just being a little bit behind, right? Over here, we can see overlaid the UK PPI and the UK CPI. And as we can see, the UK PPI is generally a good indicator of where the CPI is going to go, okay? So, having said this, I think we are now entering a trend which I addressed, and it's getting quite dangerous, which is a lot of central banks now beginning to over-tighten, okay? We're seeing this with the ECB especially as well, and the UK, and to an extent, right, the Federal Reserve. Now, we did get Powell coming out over the week and talking about the need to keep on raising rates, okay? Saying that most Fed officials expected to at least raise rates another time during this year, okay? Flying in the face of what the market has been expecting, which is actually, if we look at the Fed funds futures, right, that we are already going to get cuts, okay? And this actually did trigger a bit of a sell-off in markets, okay? So we are digesting that news of, well, some people are digesting that news, something that I think was already expected. Some of us were already expecting that the Fed will indeed raise rates again. Now, we're talking about one or possibly two rates increases. If we look at the CME target rate probabilities here for the next Fed meeting, it is now, sorry, that's in 2 weeks. In the next Fed meeting, it is now pretty much consensus about almost 72% that there will be indeed another rate hike. However, we look further on to that September meeting, the consensus is that there will be a pause. So I believe the Fed has signaled that it should raise perhaps a couple of times. The market denied this for some time. Now it is slowly starting to believe, okay, yes, we will get one more raise and then we will pause. But again, we will see how this starts to shift in September. I would not be surprised at this point. Like I said, the UK has set this precedent. And again, I would not be surprised, especially with the economy trending up, or markets trending up rather, not the economy in fact, because if we are to look at the latest data in the economy, yeah, we did get those PMIs coming out in the US below expectation. Again, we got the composite PMI falling to 53 from the previous 54.3%, and this was in fact well below the expectations that we had before of 54.4. Okay, so we are starting to see a little bit of weakness there in the US economy start to come out. And again, this could really start to trigger that pullback, which I've actually been talking to subscribers about for a couple of weeks. And we have indeed already, I believe it was something like the worst week since whenever the headline came out. So we have started to get that pullback. I expect a little bit more pullback, and I do have to start to perhaps, play with the idea that, could a kind of larger degree top be in? Again, this is not what I think for the moment, but one thing is for sure, as investors, the risk is now to the downside, okay? We've had a lot of upside that we've managed to catch, and now we have to be prepared for some downside at least, if not an even deeper correction. And if we look at the next week, we will get some important news, okay? Of course, we will get Fed Chair Powell speaking, and then the initial jobless claims, okay? And now this, as always, will be very important when it comes to affecting the narrative of the strength of the US economy, of course, those initial employment numbers, okay? And then we will also get some consumer sentiment and PCE data. So that's what we're looking at for next week. Now, in terms of how this is affecting markets and different areas, well, most of all, we have the dollar index. Okay, now the dollar did catch a bit of a bid following basically this kind of reassessment of rate hikes here. So sorry, we can see that we have bounced off kind of this this support line we had here, okay, and in fact bounced above the 50-day moving average. Okay, now if we look at the structure here, we are pretty much in a wedge. Okay, so I do think that basically we could come back up here, okay, before we actually break out of this wedge. Now, in theory, this wedge should basically trigger this wave 3, okay? Basically, this wedge should be a continuation pattern where we, complete this structure, sort of trade along here a bit, and then break down to the downside, okay? So still expecting that downside in DXY, in the dollar index, so something important to trade. And that is, primarily one of the reasons why I do think that we could certainly see risk assets continue to appreciate in the coming weeks and even months, or rather more months than weeks, because I do expect some weakness in the coming weeks. Let's look at the charts to have a better look at this. But before we look at markets, of course, we need to talk about Bitcoin. Now, Bitcoin, of course, has been the rising star of the week. Okay, we've seen how basically we bounced off exactly this level here. This was the top of our wave 4 in our Elliott wave structure. If we look back, this 1, 2, 3, 4, 5, and it's also, you can see these lines here are actually indicating, let's get rid of that for a second. These lines here are actually indicating what you could call an inverse head and shoulders, okay? And this is the neckline. So we actually bounced off of that neckline. And on the other hand, we can also see that we had a lot of confluence around this level. We also bounced off just about that 50% retracement of this rally here, which we have labeled here as a wave 1 in our Elliott wave structure. And we bounced off the 50% retracement level very clearly. And we also pretty much also bounced off this kind of downward trend line, more kind of a descending, not quite a wedge, just a descending channel, yeah. And of course, we can see that once we broke out of that wedge, we really did begin to see a lot of momentum picking up, okay? So we broke above, first of all, of course, that wedge, which also, sorry, we broke up out of that wedge and also that 50-day moving average. And of course, that's when momentum really picked up. Now, in the more shorter term, I would expect some sort of a retracement, as we can see here, okay? We can see we have here an ABC structure that should follow this primary impulse. And of course, we should find support at the lowest back on this trend line, yeah? So about 27K at the lowest. This, of course, before we continue into basically this kind of diagonal that we're forming to finish off this wave, what would be this wave 3, okay? So 1, 2, 3, 4, 5, okay? Now, I want to also present a slightly different count, and this is perhaps a little bit more clear if we look at the GBTC chart. That's the Grayscale Bitcoin Trust. This is, actually, I was looking at this chart and thinking, wait a minute, this actually looks a bit more. Now, we can make this count with Bitcoin too, but this makes me think, right, that in fact, this was a wave 1, okay, potentially. And then we had a wave 3, same length as the wave 1. And now we would get a wave 5. Oftentimes we get extended wave 5s in Bitcoin. So GBTC could continue into this area. Of course, what does this mean for Bitcoin and GBTC, right? It means that this is in fact a 1, and then we'd have a pretty significant sell-off, okay? So then we could potentially sell off back into, levels of like 20K. Let's go back to the Bitcoin chart to see it a little bit better. So rather than have that, now on the Bitcoin chart, it's a bit harder to see this. I don't really like this as a wave 1, but potentially, so rather this would be the wave 1 then, 2, then we'd have this as a 3, just about, just about filling in that wave. Again, this is rare, so this is why it's not really my primary right now, but that could be our wave 3 there, 4, 5, and then basically saying, okay, well, that's it then, right? So we have now what's good about this to an extent is that, first of all, our target for most immediately is this. Okay, this is something I'm pretty sure about, is that we're going to reach around this level. This is where we have significant resistance, just around this 40K area. And this is where the fibs are projecting us. Of course, what this means is that once we reach that level, hypothetically, wave 2 could retrace back around, say, well, somewhere around 25, even 22,000. And this would, of course, be very much in line with our idea of the halving cycle, which, sort of shows us that Bitcoin tends to rally for a little bit before the halving, then it consolidates, and then, of course, it begins to rally up again right after the halving. A halving that is, of course, due around April, March, I believe. So somewhere, I think somewhere around here. Anyway, well, you have it. It's not exact, but somewhere around there. And this dynamic that basically we also saw play out last cycle, again, not something that necessarily has to play out again. It has pretty much played out the last few mining cycles, basically. But something to, now, of course, this was a bit, exacerbated by the COVID crisis, of course. That's when we got this low here. You can see that actually Bitcoin retraced almost 100%, right? Retraced down to the 0.113 extension. So again, a lot of potential there for, perhaps a big sell-off coming. Something that we definitely have to watch out for, okay? Because this is something that could happen, and this would be in line with perhaps an idea that I'm, going to start playing with, that markets could also be in for larger than expected correction. Okay, now if we look at something like the XPX chart, I have been bullish for a while. I've made that pretty clear, but I've always had this kind of outline in the background, where in fact this is actually part of a larger 3, 4, and 5. Okay, now could we make even lower lows? It's not impossible. Okay, now if we look at basically the fib levels of here, and we were to measure, for example, right, count as the wave 3, now we can see that we did retrace quite nicely into that 61.8% level, which is what made me quite confident. And to be fair, we have basically broken above what you'd expect this 4 wave to retrace. Okay, let's get rid of some of these levels. Okay, but having said that, first of all, it's important to note that we are approaching the top of our wave 3. So at the very least, we should get some sort of a retracement before we continue into what could possibly be new all-time highs. Okay, so first of all, we have to watch out. Now we are expecting, at the very least, some kind of a pullback into this level over here, which would be about 4,100, would be the 50% retracement of where we are now. Okay, now could we be in a larger wave 4 that then leads to a lower 5? Something we have to consider. It's not my primary expectation, but it's something that we have to watch out for. And there is also a possibility, right, that we could be talking about slightly different structure. Again, like in Bitcoin, perhaps talking about more of an, right, if we have a diagonal here, and this is an ABC, and this is in fact only, sorry, that's the A here, where this is only our ABC, and this is actually all a wave 1, okay? So first of all, obviously this is a lot more bullish in the long term, but it does mean in the shorter term that a retracement could take us much, much lower, right? If we then project the fibs down from this level as the top of an initial wave 1, then of course we can see that we have the potential to land much further down, okay, around 2,800. And this does actually coincide quite well with, for example, the weekly to 100-week moving average here. So something to take into account. At the very least, we're expecting some sort of a pullback. And I think we're going to have to basically pay a lot of attention to those numbers coming out in terms of the economic strength, because like I said, this recession that we've been expecting has kept getting delayed, but that recession is coming. And I do see a lot of trouble up ahead with a lot of these central banks, basically, in my view, over tightening. Okay, so that's certainly something that we have to look out for. Put this back how it was. So for now, we're watching that 4,100, and that would be the level to get back in. Now, talk a little bit about commodities, because those have also been moving sort of kind of in the direction that we expected. At the very least, gold, which, like I said before, should really hit at least, I don't have all these fib levels here, should hit at least that 174. This is GLD. Of course, so let's go to the daily chart. And I did say that I was actually looking at more of retracement, yeah. So I have so many. Let's reduce this count a little bit. So, okay, at the very least, a retest of maybe this 200-day moving average, and a test of that, at the very least, this is a 38.2% retracement here. 50% would be more likely around 169 for GLD. Okay, so moving in that direction, yeah, not quite yet picking up steam from that China reopening narrative, which has not really come together yet. Now, we did see China start to begin to signal that it will begin to stimulate the economy, and that is making me think about starting to buy these commodities. One of the commodities that I did talk about buying recently was copper, and I actually put out a trade to buy copper miners, and we did see copper miners bounce significantly from these levels, yeah, and we are now at just about at the 61.8% retracement and retesting that 200-day moving average. So again, I think this, in terms of getting long copper, is a very, very good spot, yeah, to go long copper. So this is a very good spot to long copper, and I think it's a good way of playing that kind of China reopening narrative. Okay, copper oftentimes, or copper basically kind of moves together with Chinese stocks, Chinese equities. For those that follow my work, you guys know that I'm also kind of bullish on the outlook for Chinese equities, at least in the more immediate term. China does have a lot of problems in the longer term. Yeah, it's no longer that kind of epic growth story of the past. And of course, there's the geopolitical problems as well. But in any case, I think playing this through commodities is a good idea. And now, just real quick, let's also have a quick look at the NDX, of course. And this, I also was expecting to see a pullback, and this is what we have got so far. Yeah, now we can see the RSI going back into the going back from overbought territories there, and basically so far retracing a little bit. But in the NDX, I do think that as far as this rally can continue, I do think that we could get a significant rebound around basically this level here, so 14.3. We have the confluence of the two trend lines there. It's the 38.2% retracement of this move up. And yeah, basically, I think that would be a good spot to land before we continue. Okay, so not that much of a pullback. I still think that that AI narrative, and again, that weakening dollar is going to help pull the NDX up still a little bit more. Okay, so that's my outlook on NDX. And just to wrap up, I will just say, for those of you looking to catch that that train of AI, you guys feeling that you missed out, okay, this is the kind of pullback where you might actually be able to gain some exposure with some lower risk. And my suggestion is that you buy some Palantir when it hits some of these retracement levels. Okay, so if we look at the structure here, I would say this is the top of our wave one, wave one, which of course was formed with here with an ABC, and we have some strong support, coming in, around here, around 11.41. That's a 38.2. And further down, though, here's a 200-day moving average, so at about 8.87 now. this would be a very, very good buy if we can get back there. So for those of you looking to get exposure to something like AI, definitely look out for that. Okay, so this is kind of the path that I would be expecting into that target box over there. Now, Palantir, I've talked about before on a couple podcasts. I do think that, looking at the earnings and stuff, it does look quite good at this point, kind of just about turning profitable, ready to profit from this AI revolution, and also kind of this increased geopolitical risk that we're facing nowadays. And of course, with that news coming out recently about all the stuff going on in Russia right now, I'm not going to get into that. Maybe I'll write something about that at some other point. But I'll just leave it at that for today, guys. Hope you enjoyed this weekly video. Hope you found it helpful, and see you next week.